The Bank of England is warning that the proportion of households struggling to pay their mortgages could rise to levels not seen since the 2008 financial crisis. Hello and welcome back to another video. My name is Connor and I hope you're doing well. Remember, if you have not done so already, to hit that like button, hit the subscribe button. We recently hit 200 subscribers, so thank you every single one of you for your support. And as always, pop any questions in the comments down below. Oh, and one final thing before we get on to the video. I know that not every single one of you has time to watch every single one of my videos, or maybe watch all of my videos the entire way through. So I am creating a monthly newsletter which will be a roundup of property and stock news, a lot of which I talk about in my videos, to give all of you the chance to see the news that I'm talking about and keep up to date. So that's that. You can sign up in the link in the description. Now onto the video. The property market is on the verge of a major correction and the stock market is poised to fall even further as the cost of living crisis worsens and interest rates continue to rise. So what on earth is going on in the property market? Well, the Royal Institute of Chartered Surveyors recently reported that they expect homeowners are going to struggle to make mortgage payments and repossessions are going to rise next year as soaring interest rates and falling prices mark the end of the UK's 13-year housing market boom. This kind of finding shouldn't really come as a surprise to many of you if you've been watching my videos over the last few months. This is just one of many reports that has been saying something similar over the last couple of months. But this report also looked at data which has reaffirmed that this isn't just guesswork. There is actually hard data backing up this claim. The report stated that the number of inquiries from potential buyers fell for a 5th month in a row in September, while sales fell to the lowest levels since May of 2020, when the housing market all but ground to a halt during the early stages of the coronavirus pandemic. And the number of new instructions to sell has continued to fall. Stock levels are at historic lows, with estate agents on average listing just 34 homes on their books. We also had annual house price inflation drop for a 3rd month in a row in September, falling from 11.4% to 9.9%, which, let's be honest, 9.9% is still high. However, there is a fall. Something that you may be hearing people say, because I'm hearing it, and I'm getting some comments about this as well, is that I don't think prices will fall that much because we have a supply problem. Well, unfortunately, supply problem or not, raising interest rates have a detrimental effect on the property market, as history has shown us time and time again. And when people are used to paying 1 to 2% and then have to make a jump to 6% plus, you better believe that they are going to stay where they are and not move, especially if they were planning to upsize to a bigger and more expensive property. And while we are on the subject of mortgage rates, according to moneyfacts.co.uk, as of Wednesday, the average 2-year fixed mortgage rate hit 6.46%, while the average 5-year deal was 6.32%. The highest level since the financial crisis in 2008. To give these numbers some context, the average mortgage loan in the UK as of 2021 was £137,934. So, someone with an average mortgage with 20 years left to go at an interest rate of 6.32% will be paying £1,014 per month. That is a whopping £316 more than if you had the exact same loan but at 2%. This means the average cost of repaying a mortgage at these new interest rates will account for 27% of a person's income if they earn the average UK salary of £38,131. This is up roughly 10% from June this year. So basically what all this means is that nearly 30% of an individual's income will disappear to mortgage repayments. And unfortunately, it's not just homeowners that are impacted by rising interest rates. All of this has had a knock-on effect, with the slowing of house sales causing a significant surge in rental demand, alongside a fall in landlord instructions for new lettings. The RICS, Royal Institution of Chartered Surveyors, reported that the near-term expectations point to further strong growth in rental prices over the coming 3 months. In 20 of the UK's biggest cities, there has been a drop in the number of advertised rentals. In half of them, the decline was 40% or more. This drop is causing rental prices to absolutely skyrocket. Increasing rental rates will help landlords when they come to remortgage their properties. However, as many as 30% of those with buy-to-let loans are likely to fail their renewal test, according to a report by credit rating agency Moody's on Wednesday. In order to refinance, buy-to-let mortgage holders have to meet certain affordability criteria, based on a minimum interest coverage ratio or ICR. The soaring interest rates make this more difficult. A 4% increase in interest rates by the end of 2023 will push 30% of buy-to-let loans below their minimum ICR requirement. And this news has come from Carmen Brunetti-Liavona, analyst at Moody's Investor Services. So, when there is a downturn in the housing market, it is likely that we will see an uptrend in the number of renters, because mortgages become either too expensive or unavailable, particularly if you're a first-time buyer. The only real thing that is available in order to stop the upward pressure on rents is to increase the number of properties available. However, this is easier said than done. The Conservatives pledged in their manifesto to continue to increase the number of homes being built, but according to Sky News, in the decade up to 2021, the population grew faster or at the same rate as the number of homes in 150 out of 309 local authorities. So, unfortunately, it seems that even expanding the number of houses in line with population growth is not going to be enough in many areas to stop that upward pressure on rents. So guys, there we have it, another update on the property market. I hope you found this video useful. If you did, remember to hit that like button, hit the subscribe button, and drop any comments you have down below. Also, don't forget to subscribe to that monthly newsletter that is coming soon. Until next time, have a good one.